A very good morning from Khandwala Securities Limited and welcome to Monday's trading action at Dalal Street dated May 23rd, 2022. In the week gone by, the benchmark indices witnessed solid recovery amidst oversold conditions as Nifty rebounded 3.07%, reclaiming 16,200 mark to end at 16,266.15. The positive takeaway was that the benchmark snapped a 5-week losing streak. The big question, dead cat bounce or bottom in place? Honestly speaking, the big theme on the front pages continues to be inflation, inflation and inflation. The threats of rising inflation and the cost of living continue to feature on the front pages. Technically speaking, both the bulls and bear will return to their previous rightful places, bulls all around and the bears nowhere to be seen, only if Nifty closes above its biggest hurdles at 16,411 mark. Only a close below 15,951 mark will spell trouble for Nifty bulls. Now before we get into details, here is the preferred trade on Nifty and Bank Nifty. Nifty closing price 16,266, buy between 16,100 to 16,150 zone, strict stop at 15,901, target 16,411 and then at 16,657. Aggressive targets at 17,001 to 17,251 zone. Bank Nifty closing price 34,276, buy at current market price, strict stop at 32,911, target 34,655 and then at 35,251, aggressive targets at 36,651. Our chart of the day is bullish on Balrampur Chini and SRF with an inter-week perspective. Meanwhile, to give relief to consumers battered by high fuel prices, excise duty has been cut, petrol price slashed by Rs 8.69 per litre, diesel by Rs 7.05 per litre. The Indian government is considering spending an additional 2 trillion rupees, which is $26 billion, in the 22-23 fiscal to cushion consumers from rising prices and fight multi-year high inflation. Government waives import duty on raw materials for steel industry, export duty on iron ore hiked to 50%. We suspect real estate sector will benefit immensely from this move. Meanwhile, in Friday's trade at Wall Street, the S&P 500 had a near bear experience, was on pace to finish more than 20% below its January record highs, but a late recovery kept the bear at bay. Nifty is now down 6% for the year, while the S&P 500 is down 19% for the year, and the Nasdaq Composite has dropped already by 27%. So the big elephant in the room is that the S&P 500 is creeping towards bear market, which could dent sentiments at Dalal Street as well. But the main reason for the pessimism at Dalal Street can be attributed to relentless selling from the FIS camp. FIS camp continued to be net sellers for the 8 straight months since October 2021. Relentless selling seen as they sold shares worth Rs 44,000 crore in the month of May. In Friday's trade, FIS sold shares worth Rs 1,265 crores while DIS bought shares worth Rs 2,149 crores. The Nifty options data for May series suggests Nifty is likely to be in a trading range of 15,500 to 17,000 zone. Maximum call open interest at 17,000 followed by 16,300 strike price. So the 17,000 mark will be Nifty's crucial resistance zone. Maximum put open interest stands at 16,000 levels followed by 15,500 levels. Call writing was seen at 16,300 and then at 16,200 strike price, while there was meaningful put writing at 16,000 and then at 16,100 strike price. Bank Nifty's maximum call open interest at 36,000 strike price, while maximum put open interest at 33,000 strike price. That's all we have for now. For any queries, do contact us at 02240767373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Khandwala Securities Limited or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.